Hey everyone, it is Mitch Stein, and I am here today to share with you a meeting that we had the other day about 2-1 buy downs. Interest rates are high right now, and everybody is concerned like, how can I afford a house? How can I afford a house? We don't believe the interest rates are going to stay high, so we have this temporary buy downs program. It's a 2-1 buy down. So we had a meeting with one of our lenders, Patty Delgado, and she's going to go through and explain the 2-1 buy down for us. Do me a favor. These are free content. If you could please subscribe to our video, we'd really appreciate it. Also, if you have any comments, questions, or would like us to get back to you, just leave a comment down below. All right? Well, here you go. Please enjoy the meeting we had about 2-1 buy down with our friend, Patty Delgado.
How does it work? What is a 2-1 buy down? So let me go over just briefly how it works. And I sent you guys a presentation 2 days ago. So let's see. How do I scroll down, Mitch?
The first one, this one. Yep, there you go.
Okay. So a 2-1 buy down, what it is it lowers the buyer's payment, monthly payment for the first 2 years, okay? So it's available for conventional, FHA, VA, and it's only available on a 30-year fix. So the adjustables, those are not living. And it's only for owner occupied. Now, if you have a client that is getting down payment assistance, you cannot do the 2-1 buy down. It's just for your regular 30 years with no DPA.
What is there a down payment? So when you said, so what is the minimum down payment for?
Well, regular FHA 3.5%, and then VA you can go 0 down, and the conventional 3 or 5% or 20%.
Okay.
Yeah. Okay. So what's the benefit for you as the realtor? You're gonna get more traffic because right now clients that they're concerned about their payment and the rates are they're so high. So you're gonna get more traffic. You're gonna get more listings. And also for the borrower, what's the benefit for the borrower? They're going to have a lower payment for the first 2 years, right? And I'm going to go over a sample real quick right now that is going to show you how it works. Okay, so the way it works is, so for the first year, the rate is reduced by 2%, right? That's why it's called 2-1. And then the second year is reduced by 1%. So what happens after the third year, the second year? On the third year, your mortgage is going to go to your regular note rate. So it's a fixed rate for 30 years, and there is no prepayment penalty, meaning you could refinance anytime, right? So if the rates go down next year, you can always refinance. Let me know if you guys have any questions. Mitch?
I did have a quick question, Patty.
Yeah.
Now, I know in a traditional loan, if you were to refinance, you'd want to wait 6 months, 6 months of payments. Does that apply?
No.
Or like, say something crazy happens in Q1 of next year and the rates drop, obviously would the buyer still have to wait that traditional 6 months? Or
for the FHA, yes, not for the conventional.
Oh wow. Okay.
Yeah.
Very cool.
So let's see. Okay, so here's the sample that I want to go over with you guys. So let's say the loan amount is $450, right? So $450, let's say the note rate 6%. So the full note rate 6%, that's going to give you a payment. This is just based on principal and interest. It doesn't include your taxes, your insurance, HOA, none of that. It's just based on principal and interest. So that's going to give you a payment of $2,698, right? That's your regular 30 years, right? So then on the first year, the rate is going to go down 2%, right? So it's going to go down to a 4%. That's going to give you a payment of $2,148. So your regular payment is $2,698 minus your new payment on the first year, $2,148. That's a $550 a month, you guys, savings for 12 months. Okay, that's the first year. And then on the second year, the rate goes down 1%. So it's going to go down to a 5%. That's going to give you a payment of $2,416. That's going to give you a saving of $282 a month for the second year, right? So the total savings to buy down the rate, it's $9,984. So that's what the seller is going to pay for the buyer to buy down the rate, which is
We're writing in our offer.
Yeah, you have to write in the offer that you're doing a 2-1 buy down.
It's 9,984.
84, yeah. Yes, yeah. So that will be the seller, and it's, you know, it benefits the seller because instead of reducing the price, what, 20, 30, 30,000, he's only paying 9,984, right? And then the buyer, of course, the buyer's going to be saving almost $10,000 for the first 2 years. So like I said, what happens after the second year? So in the third year, what's going to happen is it's going to go to the regular note payment and the rate. So 6%, $26.98. That's going to be their payment for the remaining term, but they can always refinance, right? Any questions, you guys?
Oh, here's my thing that I'm thinking out loud, everyone, is that when you have a listing appointment, you should already have called Patty and had those numbers, and you should just put it in your listing presentation. So we're going to ask this much for the house, but we already know that the concessions are going to be this much, because then what it's going to do is it's going to put you above the pile of everyone else trying to get that listing.
Yeah.
Right?
Yeah.
Because now you're going out and you're telling people, look, we can get you this lower interest rate in this house.
Yeah.
Right?
You would put that in your listing. Like
You would put that, right. You would put that in the agent notes. I don't know.
I've seen it in the description.
Can you put it in the
I've seen
descriptions?
it. I've seen it on a condo. They're like, seller will give 5,000 concession,
Yeah.
There you go.
credits.
So put it in the descriptions.
Or you could put sellers willing to buy down the rate with a 2-1 buy down. I had a realtor that called me the other day. He says, you know what, Patty, I have, you know, because he heard about the 2-1 buy down. I have a client that he wants to sell, but no, they have the house on the market. It's not selling because they're asking for price reduction. So I go, look, show him this, give him this option. He's saving like $10,000. So he went for it. He took the listing. Yeah.
And now more people are going to be brought over there.
Right.
You know, the
Yeah.
agents are going to bring the people. And not to mention, like, we haven't said this, but, you know, then I'm still getting commission on the original
Right.
purchase price.
The other thing, Patty, I'd like you to check with your legal is that, can we advertise a lower interest rate when we do the flyer? If we already know we're willing to buy it down, can we advertise that lower interest?
With a 2-1 buy down, you mean?
Yeah, so when I have an open house and I have your flyer there, if someone sees a 5 or a 4, they're gonna say, how did you get that? And
You
we're like,
you can advertise a lower rate, but you have to put the APR, you know, the
Right.
annual percentage rate. Yeah, it should be fine, but you have to put the APR.
You know, it'd be really cool, Patty, and like, this is just an idea, obviously, but kind of piggyback on what Mitch is saying.
Yeah.
It would be like, you know how you do the rent versus own?
Yeah.
What if we did like a flyer on the back of the open house flyer, and it says like, hey, this is what a buy down would look like. This FHA, FHA, VA, and conventional,
Yeah.
and then you would be like, oh, this is what it would look like if we did.
I can do that. Yeah, we can do that.
That would be legit.
Yeah.
What do you think, Mitch?
yeah, I think that if you say anything lower than what the interest rate is now, people are good. It's, you know, all the legal terms have to be there. But what I'm saying is if what is the interest rate at today, Patty?
It's about 6.8, on the 30-year fix, 6.875.
6.8. So if you had a flyer that said buy this house with 4.8% interest rate,
Mhm.
people are going to be, they're going to talk to you.
Of course.
Absolutely.
Legal mumbo jumbo's got to be at the bottom. I understand that, but you know, I just had somebody who bought a house at 4.3, and you know, when I posted that, I had other real estate agents contact me and be like, where did you get that loan? Right. And so I think that that's one of the things that we're going to have to do with listings in particular is because people want to buy right now because there's a deal, right? But when they hear 7%, 6% interest rates, they shy away. But 4%, is only 1% more than the 3% we were.
Yeah. Yeah. It's all
Right.
Yeah.
So if there's a 4 in front of it on your flyer, that takes that fear away.
I agree. So I think I mentioned this, but the buy down, it has to be paid by the seller, right? So what happens once we close escrow, those funds go into an escrow account. So it comes to the lender. So in this case, it will come to Homebridge escrow account. Also, what happens if the client defaults, or what happens if the client pays off the loan within the buy down period? What we're going to do is we're going to do a principal reduction for the remaining balance. So it doesn't go to waste because that's their money, right? So it will do a principal reduction. And the way we qualify.
That's interesting. So that's interesting. So really, they're not buying the buy down. What they're really doing is they're giving you the money. It's going into an escrow account. And every month, they're pulling off that escrow account.
Yes.
To help with your payment.
Yes, exactly.
So if they so that's their money. So if they refinance in 6 months, then the principal, the remaining money in that escrow account buys down
the principal balance. Yeah,
that's interesting. And in regards to that, because the seller credit that now belongs to the buyer, right?
Correct.
Okay, so that's why it needs to be in the contract. I've done one where the buy down was negotiated after the fact. So we did it like an ADM. Actually, Tara can speak to that. We've got something right now. But I realized that it's that what the seller's doing is essentially paying the interest for the buyer, right?
Right.
Okay, that makes sense. That's really cool. I didn't know that money wouldn't just disappear.
Oh no, it's
that's dope. That's really cool.
That's something I didn't know until just now. Once you said it, it made a lot more sense.
Yeah.
That makes total sense now.
How that math works.
Yeah.
Right.
Thanks for that, Patty.
Oh, you're welcome.
Little nugget.
You learn something new, right?
Right.
Well, then that's now that what that does too is that it helps that right there. I think helps your buyer because your buyer's like, no, I just want 10,000 off the purchase price. I don't want. I just want. And we're like, listen, you are getting 10. You are getting it.
And you know what happens, Mitch? When they reduce the price, you know how much the payment goes down. If they reduce the price,
$100, not even
$20,000?
like $20,
penny,
$30.
Yeah, no, with 20,000, about 100, which is not much. Versus you're getting like 550 with this scenario, every month for 12 months. So it makes sense to go with the 2-1 buy down.
So it's $2,400. If we get them to go down $20,000, then it equates to $2,400 saving in the first 2 years, right?
Mm-hmm.
Yep.
Or $10,000 savings, right? Yes, if you were never going to refinance your house, the $20,000, if you're $20,000 down, was it better? If you were like, I'm going to stay at 7%, I like that. Well, then yes, that's the better deal.
Yeah, exactly.
For 30 years, right?
For 30 years. For 30 years.
I know. You'd be surprised. You have clients like that they have not refinanced. Never. And they have like a 7%. I go, oh my God, you didn't refinance when the rates were low. Okay, so how do we qualify the client? We qualify the client based on the 30-year note rate, not the 2-1 buy down rate. So with the higher rate, the regular 30-year note rate, that's how we qualify the borrowers. And as I mentioned, the buyers cannot pay for the 2-1 buy down. The seller has to pay for it. I think that's about it, you guys.
So this is what I want that's very important for everyone to understand too, because what happens is when people hear these programs, they have flashbacks to 2008. In 2008, what happened was we were qualifying them based on principal only.
Yep.
Right. So then what happened was when the interest kicked in, they could not afford the house.
Yeah. Yeah.
Right.
And that's why
what
I'm
we're doing.
getting all these
We're
questions.
you're getting you approved at the 7%. If you never refinance after 2 years, you're still approved at the 7%.
Yep.
6.8, whatever it is. Right.
Yeah. Because we qualify with that rate. Yeah.
And so, to be honest, I would like to see the 2-1 happen at every interest rate, because when you're a new home buyer, it eases you into your payment this way.
Yep.
Because when you buy your first home, you're like, you're not used to the water bill's a little bit more expensive.
Yeah.
The trash bill's a little bit more expensive. You're not used to having to pay for your own gardener. When you're a renter, these weren't things that, right? So it kind of eases you into home ownership by giving you that extra $500 or $600 every month for that first year. The other thing I want people to remember when they're talking about house payments is taxes. Make sure they talk to their tax associate, but the rule of thumb is if you're renting, none of it is a tax write-off, right?
Yeah.
If you're buying, 2 house payments come back to you at the end of the year. That's about the equation, right?
Yeah, the write-off.
That's a lot of money.
Yeah.
I had a quick question, Patty.
Yes.
In regards to the 2-1 buy down, can a buyer do a combo where, they put some of their down payment money towards their own buy down? And so the threshold for the 2-1 buy down, let's say they buy down to 6.5, and then so they're going to 4.5 from the seller. Is that a combo situation that can happen? Or is it, if you do the 2-1 buy down, you have to do the prevailing rate and the buyer can't buy down his own rate at all?
Oh yeah, no, they can. Yeah.
Oh,
because
they can.
they can. They could buy down the rate, because see, the buy down is just the seller is paying the difference in payment, right? That's what the seller is doing. The buyers can always buy down the rate. Oh yeah.
No shit. That's
And
but
that
they can do a combo though. They can do a combo of the two then.
They can buy down the rate, of course.
What?
Yeah, they could buy down. They could buy points.
You guys, that's game changer right there.
What are points ranging on that 450 though?
Right now, the 6.9 is about 1.5 in points, but we're able.
No. 6.9 go. What would 6.9 go to at 1.5? To get 6.9.
So 1.5
right now.
of purchase?
Yeah. So right now, the 6.9 it has 1.5 points costs. So the buyer's already paying 1.5 points. If they want to buy it down more, buying more points, they can do that.
Gotcha.
Yeah.
So if they threw, let's say 1.5, that would be like around $8,000. If they happen to have like a gift from dad or mom and put that towards bringing down their initial rate, and then the seller goes, all right, and I'll pay for a 2-1 buy down.
Yes.
For the first 2 years.
Yep.
Then now you just brought your rate down to 4.5 for the first year, which substantially lowers your monthly payment. And in the meantime, hopefully you're diligent and smart about it, and you get those taxes back, and you just put that in your own escrow account, and you know what I mean? Like, we're operated as an escrow account to subsidize your next year's payment. That's so good.
Payment.
Sorry, I don't mean to like
a year.
speak out on it. That makes a lot of sense.
Yep.
Oh man, all right. That's a good one.
We love it. Does anyone have any other questions for Patty Delgado? No? All right, everyone. Patty, thank you so much for joining us.
Thank you, guys. Thank you. You guys know, if you guys need anything, just let me know. If you need a scenario, let me know, and I'll do it for you right away, or a flyer or something. Just reach out.
Perfect. Well, there you have it. 2-1 buy downs. Not very difficult, right? Anyways, if you have more questions, you can reach me direct at Coachmitchstein.info or leave a comment down below and we'll make sure to send you a message back. All right. Thanks, everyone. And please subscribe to the channel. Have a good day.